For literally thousands of years, there's been one asset that's the ultimate symbol of wealth and security: gold. But it's so much more than just fancy jewelry. In this explainer, we're going to break down exactly how it can be a real cornerstone for your financial security.
I mean, with inflation on the rise and all the economic uncertainty floating around the globe, it's a question on pretty much everyone's mind. You work incredibly hard for your money, right? But how do you actually protect its value for the long haul?
Well, for centuries, the answer has always come back to gold. It's not just a shiny metal, it's this timeless asset that's acted like a financial fortress, protecting people's wealth against, well, just about everything.
So let's dive into why gold is such a big deal in the global economy and, more importantly, what role it could play in your own financial life. It's time to move from that feeling of anxiety to a place of real security.
Gold has this really fascinating split personality. When times are good and the economy is booming, it's a symbol of wealth. We see it in jewelry and ornaments. But when a crisis hits, it completely transforms into a safe haven, a reliable place to park your money and preserve its value when other investments might be tanking.
So what is it that gives gold this unique power? Let's get into the basics of what makes this one metal so special that it's been trusted all over the world for millennia.
It really starts with its physical properties. First off, gold is incredibly durable. It doesn't rust or tarnish. It's also really easy to shape. And, this is the big one, it's rare. Unlike paper money, you can't just print more of it. That gives it a real, intrinsic value that's hard to dilute.
And those properties give gold three key jobs in the economy. First, it's a store of value. Think of it as a shield against inflation that eats away at your cash. Second, it's that safe haven we talked about, the asset people flock to when things get chaotic. And third, it's an investment tool that offers the potential for profit as its price goes up.
Now, the price of gold isn't just sitting still. It's always on the move. So in this next part, we're going to look at the powerful global forces that are constantly pushing its price up and down. This table breaks it down perfectly. Think of it like a bunch of seesaws. When the US dollar gets stronger, the price of gold tends to go down. Same thing with higher interest rates. They make things like savings accounts look more attractive. But on the flip side, things like high inflation or a global crisis, that pushes the demand for gold way up and its price follows.
Okay, so how is that price actually set? Well, the global standard is priced in US dollars per troy ounce, which is about 31 grams. But the price you actually pay at a local shop is a mix of that international price, plus manufacturing costs, taxes, and of course your local currency's exchange rate against the dollar.
All right, so let's say you've decided gold might be a good fit for your portfolio. How do you actually invest in it? Let's jump into the practical options.
You've basically got two main paths. On one hand, you can own physical gold. We're talking bars and coins that you actually hold yourself. It's a real, tangible asset. On the other hand, you can go for electronic gold through digital accounts, which is super convenient. You don't have to worry about storage, and you can buy or sell with just a few clicks online.
And there's another really popular modern option, the gold ETF, or exchange-traded fund. The easiest way to think about it is like a fund that owns a massive vault of physical gold, but you can buy and sell shares of that fund on the stock market just like a stock. It gives you direct exposure to gold's price without you ever having to touch a physical bar. All right, let's get to what might be the most important part of this whole explainer. It's not just about what you buy, it's all about how you buy it. These are the golden rules for making smart, safe decisions.
First and foremost, let's get our expectations straight. Gold is a defensive play. Its main job is to protect your wealth over the long term, not to make you a millionaire overnight. Seriously, approaching it with this mindset is absolutely key.
And you can see that long-term power right here in the numbers. It started the century at around $300 an ounce, and since then it's climbed to over $2,000. This shows you its real role. It's not a short-term gamble. It's a tool for steady, long-term preservation of your money's value.
Now, if you're buying physical gold, this checklist is your best friend. Step 1, only, and I mean only, buy from a trusted, reputable dealer. 2, check for the official stamp that certifies its purity. 3, make sure you verify the exact weight. And 4, always walk away with a formal, detailed invoice, no exceptions.
And finally, let's cover a few more rules for being a disciplined investor. Rule 1, never ever go into debt to buy gold. Rule 2, watch out for high manufacturing costs that can just eat up your returns. Rule 3, be super wary of media hype. When everyone is screaming, buy, that might be the perfect time to be cautious. And Rule 4, and this is a big one, diversify. Gold should be one part of a balanced portfolio, not the whole thing.
Ultimately, when you boil it all down, gold's appeal comes back to this simple truth. It's a universal symbol of value and safety that's understood everywhere, throughout all of history. When the markets get nervous, gold is just reassuring.
And that leaves us with one final question, and this one's for you to think about. Now that you understand what it is, what drives its price, and the rules for investing smartly, what role, if any, should gold play in securing your own financial future?